The big picture. I won't dwell on this too long. Obviously, Mark and I follow this stuff intimately, so if you want to ask questions or is there anything that particularly interests you, please don't be shy. But just to run us all through, to get us, I guess, all onto the same page of at least how we're thinking about life. Like most of you, I'm sure, I'm pretty fed up with reading about Trump. That's not a political statement. I'm just exhausted with the amount of Trump information I have to absorb. Unfortunately, that's not about to change anytime soon. The US is by far the largest economy in the world and the biggest, most important geopolitical power. And whether you like it or not, depending on what side of the political aisle you're on, he came in with a pretty strong mandate to shake things up, and that's what he's doing. Since he's come into office, and it's a little unusual, actually, as someone who's watched the markets for a while, since he's come into office, Trump's policies have really been the only thing that have mattered in terms of financial markets, which is normally you're expecting interest rates to move markets and GDP growth and unemployment. Really, it's what's coming out of his tweets that's moving markets on a day-to-day basis. And markets have really been through the ringer in trying to keep up with him and trying to price in what a lot of his new policies means. Just to quickly summarise the journey we've been on, so everyone, I guess, is at the same point. Coming into office, he had 4 kind of vague policy objectives. That was cut taxes, cut regulation, cut illegal immigration, and to use tariffs to rebalance world trade. I think it's fair to say in the run-up to the election and even straight after the election, most people in the business world and certainly in the markets expected Trump to be very pro-business and pro-growth, and markets rallied on his election win on the view that he would focus mainly on tax cuts and cutting regulation. He's since come in and kind of pulled the rug out from everyone, focusing on trade and tariffs, and his announcements have been much more aggressive than I think anyone really expected, and markets have had to go through a really painful repricing of what the future holds. In trying to understand what's going on here, and this is not me sort of having a political view, I think it's just a factual statement, what Trump is doing with tariffs and trade policy has got nothing to do with economics. This is all politics. This is Trump throwing red meat to his political base. This is not an exercise in economic policy. As an exercise in economic policy, and I can say this as I'm an economist, they make no sense. They will make the US poorer over time if he follows through on them. That's obviously the US's choice if it wants to do that. But that's also why we had that nasty correction in March and April. So markets do not care about politics. They just care about economic reality. And markets sold off heavily, as they should have, in the face of this new news that came out. Since the market sell-off, markets, I'm sure you have seen, have rebounded incredibly quickly and very strongly. And that is basically on the back of Trump rowing back on his initial positions. He's paused some of these tariffs, and he's selectively rowing back on some of his more extreme positions on trade, and markets have subsequently had quite a big rebound. I think the optimistic, or I guess hopeful reading of that is that there are some guardrails on his actions. While he wants to remake the American economy, he probably doesn't want to be the president that's known for causing a nasty recession. So it seems that financial markets, and particularly the treasury market, are able to impose some level of financial discipline or economic discipline on what Trump wants to do. So if you're sort of a centrist type of person and hoping for a calm ride through life, I think we can all thank the US Treasury market for keeping some of Trump's instinct in check. That's all interesting, and that's really how we've gotten over the last 6 months, that where we are today. We had a big correction, a sharp bounce back. All very interesting. As always with markets, we need to be looking forward, not backwards. So just to run through what I think is going to increasingly become the front page news story for the next few months and the rest of this year, is it's going to be the Republican, again, this is all politics, unfortunately. It's not unemployment, it's not GDP growth, it's not productivity. It's going to be American politics, sadly. And it's going to be the Republican Party's efforts to pass a big tax cut bill. So far, since Trump's come into office, everything he's done has been by executive order. Now, most of the serious business of government is actually done by legislation. That's the way it's supposed to be done. And certainly for big, important things like tax and spending policies, it has to be done through legislation. In the US, that means you have to pass a bill through the lower house, the House of Representatives, and the Senate, and then it has to be signed into law by the US president. And the problem that the Republicans face is in the House of Representatives, their lower house of parliament. They hold 220 seats. They need 217 to pass a bill. And looming over all of this is what all the sort of scheming and political manoeuvring is leading up to, is the US midterm election. So in November of next year, the entire lower house is up for re-election, so a bit over a year away. The Republicans only have a very slim majority now, and traditionally the incumbent party does very badly in the midterms. That's kind of the political consensus. Added to that, the Republican Party and Trump have been sinking in the polls since he's come out with some of his more kind of controversial policies. So for what it's worth, the bookmakers put the probability of the Democrats winning the House in next year at over 80%, so very high probability. And what that all boils down to now is essentially the Republican Party has one shot at getting through a big tax cut package through Congress. I think we're going to increasingly see this as the front page news story, just like for the last 6 months, every day it's been tariffs are on, markets are down, tariffs are off, markets are up. I think we're going to see that as the conservative part of the party and the moderate part of the party battle it out to try and get consensus. I obviously don't know how it's going to pan out, but I think the easy reading will be, if they can get a package passed, it will obviously be supportive for the share market. If they can't, then I think one of the important legs for the market rally gets knocked away. And I don't think we should be too blasé and just assume this will happen. Just because they control all three branches of government does not at all mean getting a tax package through the Senate and through the Congress is a fait accompli. The analogy I think is really interesting, and if you all rewind back your memory, 2016, the news story that just dominated the headlines, especially in conservative circles, was repealing Obamacare. Republican rank and file hated Obamacare, were determined to see that law overturned. They controlled all three branches of the government. They descended into bitter infighting all the way to the end, and they weren't able to pass that. They weren't able to repeal it in the end. So I think that's an interesting analogy for tax cuts. The US is in a dreadful fiscal situation. Cutting taxes is perhaps not the most sensible thing to do. So finding a path through the different factions in the Republican Party is going to be interesting. And more importantly, I don't know how it's going to go. I don't pretend I know how it's going to go, but I think it's going to be the front page news story we're all going to have to absorb for the second half of this year. And I'll maybe just finish off in the big picture here. Can answer questions obviously later, but by adding or repeating the qualification, we doing what we do, we don't at all pretend we're able to call what markets do next. And I'm always a bit sceptical of fund managers or market forecasters that say they have some magical crystal ball. As always, Mark and I and the team are trying to build an all-weather portfolio at GVF. We think very hard about risk, and we think very hard about delivering an investment return in most market conditions that might come up, and that's all we're setting out to do. We follow the big picture religiously because we're trying to manage risk, and we're obviously at the coalface every day with markets, but we stick to a formula that Emma set out at the beginning, finding discounted asset plays around the world, buying dollars for a lot less than $1, and working really hard to unlock that value for our investors. And in that process, trying to build that all-weather portfolio.